Welcome back. You're watching Midcap Radar on CNBC-TV18. From one management to another, Aeroflex Industries is the next management on our radar. The company posted a good set of Q4 earnings with EBITDA margin expanding and revenue growing 18% year-on-year. To discuss this and more, we are now being joined by Asad Daud, MD, Aeroflex Industries. Good afternoon to you, Asad. This is Vamakshi joining in. Well, I'd first like to start off by asking about your revenue because, your revenue for the entire year has seen an uptick of almost 18% now. This is much lower as compared to what you had earlier guided for, that was in the range of 20 to 25%. So would like to understand from you, where is this shortfall actually coming in from, and what is your outlook going forward looking at FY26?
So thank you so much. So in terms of our guidance, our major guidance was for growth in our EBITDA and our profit margins, where we had predicted a growth of about 25%, and we have achieved that. Yes, in terms of revenue, there has been a slight shortfall in terms of our expectation. I think in the last year, you would have seen that there have been a lot of geopolitical situations, including the Suez Canal issue and recently the tariff issues. Those were some of the reasons where we were not able to achieve our targets. But I think if we talk about our targets for EBITDA and for profits, I think we have been able to achieve those. So overall, I think the last financial year was a very good year for us.
What about FY26 then, Asad? What are you guiding for?
So similar growth in terms of both the top line and the bottom line. Obviously, with our increased focus on the high value added products, I think we'll be highly focused on increasing our bottom line as well.
Any specific guidance for the top line? Because I'm sure there is some bit of risk that is coming in, given that 3/4 of your business is export oriented and a major market is the US for you. So any sort of impact from the tariffs? If you can just give us a sense of what the tariffs were before this tariff came in, and what they are. So they are actually at 10% now. So is it lower? Is it higher? So any sort of risk coming in from the US market, which is why you're not giving us that revenue guidance?
So in terms of the risk, right, I think from the medium to long term perspective, I feel there will be a lot of opportunities for Indian manufacturers and for Indian businesses to export to the US. There might be some short term hiccups for a month or two or for the first quarter, but I think in the medium to long term, I think we can expect much bigger business coming in from the US. In terms of the tariff percentage, so earlier, the tariff for our products was approximately about 4%, which has increased to now about 10%. But yeah, but still 10% is better than what the reciprocal tariffs were going to come. So yeah.
But are you facing those hiccups on the ground currently right now, Asad?
Not much. I think if I see the overall demand, it might be slow for like a few months, but with some of our large customers, we are discussing for a long-term projects as well. So I don't feel that in the long term there will be any impact on these tariffs, as yet.
So your exports growth so far this year has not been as healthy as your domestic growth. So do you expect this trend to continue? If you can just help us understand what would be that domestic growth number, what would be that export growth number, and how would this mix evolve, given that exports was somewhere around 75%. So is the domestic portion now going to increase? And another follow-up to that would be, what would be the impact on margins, especially given that the margins in the domestic market are typically lower than what we see in exports?
So yes, in terms of for this, for FY25, we saw a significant growth in our domestic market. I think that was fueled by a lot of the projects that we got. Plus, also we got a lot of new orders from our existing customers, and we also penetrated into new segments, specifically the segments related to ports and also with the irrigation segment. So that really helped to increase the sales from the domestic market. And earlier on, the ratio of export to domestic was 80-20, now which is 75-25. And I think we will see that over the period of the next year also. I think we'll have a more focus on the domestic, especially with kind of the manufacturing facilities coming up in India. Whether it's your traditional sector or your or the new age sector. So I'm expecting domestic growth will still be more than the export, but saying that export will also grow. obviously, as I told you, right, the last 1 year has been pretty, tempestuous in terms of all the things that are happening in the world market. So hence the reason for the higher growth in the domestic. In terms of the margins, yes, export has slightly better margins, but when we sell in the domestic market, our working capital cycle reduces, which ultimately helps us in better cash flows. So yeah.
So despite this domestic shifting focus to the domestic business, Asad, do you still think you have enough levers to take yourself to that 24 to 25% margin projection that you have for FY27?
Yes, so in terms of our margins, right? So we are entering into high value added products. So if you see the sales of our assemblies business for this financial year is now more than 50% of our overall revenue. So hence these are high margin products. And now like we're going to start with the metal bellows. So those margins are much higher than as compared to what we have margins in the hose business. So definitely over the next few years, our margins would definitely be much higher than what they are right now.
Sure, you're adding capacity, and you've already added quite a bit in FY25 itself. When we look at the SS flexible hoses, the composite hoses, the metal bellows, so what is the kind of capacity utilization for these incremental facilities which have now come on board? And what is the kind of revenue as well as margin potential that we can see at peak utilization from these facilities? And just to add on to that, you're also planning to further add capacity in FY26. So for the medium term, any sort of guidance in terms of what is the kind of revenue margin potential from these additional facilities that will come through?
So in terms of the capacity, so the last year for the hose business, we had a capacity utilization of about 75%. Obviously, some of the additional capacity came in from the Q4. With regards to the metal bellows, so it is at a very early stage because we have just started the production in the last quarter. So optimum capacity of metal bellows would reach probably in the next couple of years. In terms of the margin, so at the peak utilization for all these capacities, our margin will should be well north of 25%.
Final question then, Asad. What about your QIP? Is a question that we ask you every single time you speak to us. When is that happening? You had mentioned earlier that it will happen in Q1 of FY26. We are in Q1. We are done with the first month of FY26 already. So when is that happening? And of course, what about inorganic acquisitions? Once the QIP happens, is there anything that you have set your sights on?
So yes, so as of now, it seems that it will not be happening in Q1, honestly speaking. But obviously, in the past 2-3 months, there have been a lot of uh, you know I would say the headwinds that have happened both in India in terms of the markets and also internationally in terms of the tariff wars. So hence we are taking it a bit slow, but the QIP is part of our agenda, and we are in talks with a few companies for acquisition. So hopefully in the near future we'll update when the QIP will be launched.
How near is too near, Asad? They say Q2, Q3.
I would say this financial year before Q3.
All right, Asad. Thank you so much for sparing time and joining us today. Wish you good luck for
Thank you so
the
much.
rest of the year as well. That was the management there of Aeroflex Industries. An important clarification, the QIP that was planned earlier for the first quarter of FY26 will mostly not happen in this quarter. But with that, we call time on this edition of Midcap Radar. We leave you with the Nifty at around 60 points higher from Vamakshi, me and the team that put this show together. Thank you so much for watching. Your stocks on the other side.